Hi, this is Paul Slatka, Good News Planet. I'm speaking to the CEO of Custodia Financial, Tod Ruble. Hi, Todd. How are you? Good morning.
I'm good. Great. Thanks for having me on, Paul.
Well, you have some very important information to discuss. It says here, Americans risk losing billions of dollars in savings. Families lose billions of dollars in 401k benefits without insurance to cover loans. Wow. Okay. What are we talking about?
Well, we're talking about a serious problem that's gone undiscovered up till now that's causing $6 billion of retirement savings losses each year. And these borrowers are unaware there's a very simple solution to it. I've been in the finance industry 30 years, and I've never come across such an urgent problem that's gone unaddressed like this, and it's why I became CEO of Custodia Financial.
Uh-huh. So specifically, what is it? I mean,
let me put it into perspective, Paul. There's about 100 million participants in 401 and 401k type loans,
sure,
or plans. 20 million of those are borrowing against their plan. Most all of them are the demographic that make less than $85,000, and they're uninsured. So it's a huge market. It's almost $250 million market, about 2/3 of the credit card market. We've come across a number of people that have suffered the fate. It's a single mom named Jane. She borrowed against her plan when she was denied credit twice from banks. She was borrowing to prevent a foreclosure, that being one of the three primary reasons: foreclosure, tuition expenses, or medical expenses. And she borrowed $12,000. When she was unable to pay it back, she was defaulted on her loan. They forced the withdrawal of the balance of her funds to pay the income taxes that had been deferred, and they distributed $4,800 to her. And she was already paying $225 a month. Had she just paid $9 a month in coverage on her $225 payment, if the government would fix this, then she would have prevented the foreclosure and still have the full $24,000 account balance available to her.
Okay, so as I think I understand it, I have a 401k, so now I borrow before I'm 59 or after I'm 59. Before 59, usually that's a 10% penalty, but either case you borrow off. So say you have $10,000 in the 401k. You borrow $5,000 from the 401k to use for your apartment, monthly amount of money you have to spend. However, things become even tougher for you. You literally have the opportunity to insure what? Insure yourself for that money that you borrowed? What insurance are we talking about? That's
the problem. People access the credit that they were turned down for, because the studies show that these people tried to access at least two other forms of credit: bank loans, credit company loans, credit card loans, which are worse. Those would have been insured. The lender would have required life and disability insurance as a protective measure. Right now, all 401k borrowing is uninsured. Now, I think it's difficult for these borrowers to access coverage because many of them have medical issues, so they have to survive underwriting. It could be expensive. Our solution is, let's treat loans the way we're treating enrollment into 401ks. We think it's important enough to nudge new employees into retirement savings that we auto-enroll them right now. That's an industry standard, into 401k plans, but we allow them to opt out. We don't want to take people's ultimate decision-making away. Let's do the same thing with loans when people are under even greater stress than they are when they have a new job, and say, we're going to auto-enroll you into coverage in case you die or become disabled. The money is available for your heirs or for you if you're disabled if one of those events happens, and you're going to pay a very affordable and you're going to get guaranteed acceptance. But yet, if you don't care for this coverage, check a box. You can opt out. And we're asking Congress, since this needs to be a legislative fix, because plans are governed by, federal regulations as to how they allow borrowing, that the government created 401ks and a tax advantage way and the ability to borrow, and they should deal with a contingency for death and disability, which is going unaddressed right now.
Okay, so in essence, when you do borrow from your 401k, you're not mandated to have an insurance on that as well.
No, and worse yet, the borrowers there's no disclosure of the risks associated with uninsured borrowing. These borrowers predominantly have a low financial literacy. They don't even realize there could be an affordable alternative to it. So you've got this series of events that are not just, they're failing to allow people to make good decisions. These people are remaining uninformed, and it's going unreported at the federal level because the federal reporting requirements mask the severity of the problem.
Explain to me a little bit about your company, Custodia Financial.
We're fully underwritten deliverer of this protection product with an A+ rated carrier. So when government is in a position to allow this type of coverage and auto enroll people, that we'd be a party that would be able to step in. We're actually the innovator that discovered the problem itself, the nature of uninsured plan loans, and it would have been, you can't go to Congress in good faith saying you should fix something if there's not somebody there in the free market that can do something about it and do something about it on an affordable basis, and that's where we come in.
Okay. So sometimes, though, to make change in government is a lengthy process.
Well, I've been at it 2 years, so I'm hoping I'm in the red zone, if we want to use a playoff analogy, of getting it done. But it's a great segue. I mean, one thing your listeners can do are contact their congressman and urge them to solve the problem, especially those that have suffered the fate. Somebody that's become disabled during the term of a loan, or that's had a loved one that passed away during a loan, and put a name and a face to it. It really helps compel them to make this change. We're getting close, and I'm confident this will get done. And thanks to people like you and others across the country that are allowing us to describe the problem, it only allows us to get closer and make something happen. Additionally, your listeners can access the advocacy website, which is protectmyretirementbenefits.com. And weigh in there, educate themselves, understand it better, and use that as a forum to help us in this process.
Well, this whole foreclosures and this whole financial concerns has really come to the forefront, I would say, wouldn't you?
Absolutely. And as bad as the issues are out there in our economy, many of them we have no control over. This is something we can fix, and at least we'd be checking a box and say people who have to borrow, who are borrowing for good reasons, shouldn't suffer needlessly if they've borrowed and then they become disabled. I mean, it's just compounding the problem. And once again, when such a simple solution is out there that's already being employed as the industry standard to enroll people, let's address it. Let's get it fixed and move on to, solving other problems that are out there.
Well, I agree with you. I believe in insurance, and you have SBLI. People more than likely would not be putting whatever they're up to now, $150 or whatever they cover, right? Guaranteed, the bank, or these kinds of opportunities help you get sleep, I think, at night.
Sure. Well, and at the end of the day, if people aren't comfortable with the coverage, Paul, check a box and don't accept the coverage. No one's mandating anything here, but what we are doing is employing a common sense solution to a known problem that allows the free market to step in and deal with it, and that's a good news event.
There it is. Okay, very good. Last quick question for you, Mr. Ruble. What is good news for you?
Well, good news for us to just, as a country, to come together, try to figure out how we can deal with things effectively together instead of divisively, and move ahead as a country. I mean, this is a tremendous place. I don't think anybody here wants to live anywhere else, and we're fortunate to be here. Our problems we can solve. We just need to work together to do it.
Okay, I love the way you say it. All right, thank you very much for sharing good news with us.
You're welcome. Thank you, Paul.
Take care. Bye-bye.
Bye.